Hi, friends. Welcome back to the Stock Market Shrink, where we try to make sense of the market's crazy movements and the psychology that drive these. In this video, let us look at more examples on how blindly following research reports can kill your market returns and even wipe out major portion of capital in cases. Stock market movements can be thought of as a song of greed and fear, and nothing affects it more than the unknown. Fear of the unknown can send prices hurtling down for some time, and greed for untold returns can send prices spiraling upwards. Reports that try to shed light on this future hence can have some disproportionate reactions from investors who are new to the market. We will look at some of these examples in this video. Usual disclaimer: none of the following should be considered as any stock market recommendation or advice. Also, these instances cannot be considered as having a bearing on the quality of these analysts or brokerages in general. These may be isolated cases, and to that extent, these should not be considered as a verdict on whether they are right or wrong, but more to improve our understanding so that we don't get affected. Let's start with the first example. On April 10, 2020, there was a news report about a research report on Bandhan Bank. They slashed the target price by a huge 83.5% to INR 65. The earlier target price was INR 395. Now imagine someone holding these shares. The fear of the unknown, coupled with such a prediction, can affect the strongest of hands. However, let us see how the stock moved subsequent to this report. The stock moved upwards after that research report, maybe after a brief decline, and as the lockdown eased, the price kept moving up to a level of 420 or so at its high point in 2021. Now, if someone had sold at a loss blindly after the report, he would also have to bear looking the prices going up nearly 6.5 times the target price in just about 10 months. We can only rely on our own understanding of the company and analysis and a bit of luck to escape falling into the trap of the fear of this unknown. Let's take another example. On March 5th, 2020, there was a news report about another research report on Yes Bank. They slashed the target price by a huge margin to rupee 1. The earlier target price was INR 55. The reports usually don't say that they don't know what the outcome could be in some of these extreme cases, in which case maybe suspending coverage would have been better. And hence, investors have to be very careful on what they take away from reports, especially with such extreme views. Let us now see how the stock performed after that. The stock moved upwards after that research report and went as high as INR 60 before settling at the INR 15 to 20 range. It is currently trading at around INR 16 times the target price in under a year. The next example is one which has already been covered in an earlier video, so we'll go through it a little bit quickly. On October 11, 2018, there was a news report about a research report on the Graphite Twins, HEG and Graphite Limited. They initiated coverage that sent both stocks to their upper circuits. The target price for HEG was 6,700 and for Graphite 1,550. And how did the stocks react? HEG and Graphite did keep moving up. HEG crossed a threshold of 4,000, but soon after it started a downward journey that would take it to a low of 410 or so. You can see more details on this in the other video. So in summary, one of the important things to remember is not to follow these research reports blindly. There are good reports that give a balanced view, but the issue is that if anyone unfortunately ends up relying on something and prices move the other way, the the financial impact on a portfolio can be quite bad. Secondly, if at all you do want to follow someone, better to follow what others do than what they say. If someone is putting their money where their mouth is, this can be more reliable. The only thing to be careful in such a scenario is that anyone already invested always wants the stock to do well and will hence not badmouth it really. Thirdly, back investment decisions with reasonable own analysis and invest in companies whose business you can understand. The more you learn and understand and arm yourself with knowledge, better the chances are that you won't be affected by the fear of the unknown or tempted by greed for the unknown. So that's it from me for now. Hope this is useful. And if you have any experience where any research reports or some wrong advice have affected your decision, do mail me at stockmarketshrink@gmail.com or do comment below in the comment section. Thank you.